was a strong and friendly fella with the name of Campanella. He was someone special, I could see right off the bat. There was something...
Webcasting from the Little Bell Publishing Studios in Rockton, Illinois, this is the Mortgage Messenger with host Jim Campanella. Welcome to the Mortgage Messenger. I'm Jim Campanella, and this is your recap for the week ended July 16th. So why don't we begin? And now, the week in review. Last week, as expected, everything came in within the numbers they anticipated. Retail sales were down, consumer confidence is down, inflation remains low, so rates remain, they fluctuated a little bit, but they remained low. Pretty much as expected. What you need to keep in mind here, if you're floating right now, it's a tough call to think rates are going to be any lower. Any positive news, which we always hope for positive news, we hope that there's job growth, we hope that people start spending money in retail sales and so forth, but any positive news is going to cause rates to go up. So if you're sitting there on the fence not sure what to do, you're taking a huge gamble. We're at 50-year lows. Take advantage of these rates, lock in, and go with it. Coming up next week, we have housing starts and existing home sales. Not a very busy week. Certainly they're not expected to be anything fantastic. So if there is any positive news, rates will most likely go up because nobody's expecting rates or housing starts to be anything good. So any positive news in the economy is going to cause our rates to go up. So again, keep that in mind as you're out there floating your interest rates. There's no reason to float at this point. Take advantage of these rates. Other news that came out is that 25% of adults in America have credit scores now below 599. That's up from the 15% in 2008, so it's 10% higher, or approximately 17 million more people. Their credit scores have dropped now below 600. What that means is if you're below 600, you're probably not going to be able to get an auto loan, you're probably not going to get a credit card, you are not going to get a mortgage. So you've now gotten yourself in a position where you cannot build or reestablish credit if you're below 600. So that's an alarming factor, is that we're at 25% below 600. What that does mean is that if you're in that bracket or if you're somewhere near there, you do need to be watching your credit. We've talked about this in previous podcasts. We do have the webinars on Thursdays and Saturdays on credit scoring. Now is the time for you to take focus on that. If you have not obtained your free credit report, you're able to get one annually for free. Again, a previous podcast talked about how to do it for free, truly free. You want to be doing these things. You want to maintain your credit. It is vitally important. The higher the credit, the lower the interest rate you're going to experience, the more money you're going to have in your pocket. Because if you're paying a higher interest rate, that means you're making a higher payment, therefore taking money out of your pocket. So watching your credit is very important right now. I strongly suggest to all of you to get your free credit report, to take advantage of the free webinar that I have available on Thursdays and Saturdays, and really monitor your credit situation. This statistic that just came out at 25% below 600 is another indication that we need to be watching our credit. Also recently, by the time you should be airing this on Monday, President Obama should have signed the Financial Reform Act. What this means to you, we're not quite sure yet. We do know it's going to create a consumer protection agency under the Federal Reserve Bank. That we do know. But the Consumer Protection Agency is going to have to interpret the rules, create new rules, and develop everything for credit cards, mortgages, all those things. So it's probably going to be 18 to 24 months before we see any real changes in the industry. However, there will be changes with the new Financial Reform Act. And certainly, as more information comes out, either myself or others will be keeping you informed of what this new law means. And now it's time for viewer email. If you should have any questions you would like answered in a future podcast, send an email to mortgagemessenger@gmail.com. I did want to put a plug in for a friend of mine, another Supreme Lending employee, John McClellan, who's down in Austin, Texas, runs a very successful branch down there. He has his Austin Real Estate Daily video podcast. He's actually putting his out daily because real estate happens every day. And I just wanted to bring you up to date on that. And if you're in the Texas market, certainly if you're in the Austin market, I suggest giving his blog check out his blog, because it's certainly very well done, and he is certainly a true professional in the Austin market. So the AustinRealEstateDaily.com. You should check that out. And now it's time for the tip of the week. Okay, today's tip of the week does not come for you as if you're preparing to buy a house, but if you're in the process. If you understand the system, when you get pre-approved or approved, we pull your credit, of course, and take a look at your credit to determine if you're approved. What's changed now, and this is a very recent change, but what's changed now is that prior to closing, we're going to pull credit again. And we're going to compare the credit. Now, this second pull is not going to count against you on a score. This is a soft pull, so it's not going to affect your score. But we're going to pull your second credit report and compare it to your first. Any major changes to the credit reports, your balances went up, you got new credit, anything of this nature can cause your loan to be re-underwritten, and possibly, even though you're thinking you're 48 hours from closing, you may end up being denied. More and more of your loan officers, good professional loan officers, are going to be telling you, don't use your credit until after your loan is closed. Don't go out, I know it's tempting to go out and buy that washer and dryer or even put it on deferred payment. Don't do anything from the application until after the closing, because we are going to be looking at your credit again. It's a new directive from FannieMae that's going to require us to compare your two reports, and any changes could affect you. So the tip of the day is, once you apply for a loan, continue to make your payments, do everything you normally do, but do not go out and apply for more credit. Do not go out and use your credit. Don't put a couple $100 or even $1,000 onto your credit, because we're going to find out about it, and it's going to affect your ability to get the loan. As you can see, I'm attempting another remote podcast. This one happens to be from my library, no wind factor, and I'm just trying to get a feel for if this is going to work remotely so that I can bring in some guests and we can have a real conversation as far as with other professionals in the real estate industry, attorneys, credit specialists, so on and so forth. So hopefully this one works out well as a remote podcast. As you can also tell, I don't have the window in my office, so in the studio office here, so I can't really point to a clock on the wall, but I do know the time is up. So until next time, thank you for viewing.
I can't forget you, Campanella. You're still the MVP within my heart. You're still the MVP within my heart.